Okay, here's a look at the emini S&P for Tuesday, December the 13th, 2011. Well, you can see here that that nice bounce that we had late yesterday, by the way, these are the market profiles here that we're looking at. Big down day today, this is what occurred yesterday, and this is what occurred overnight. So when we left yesterday, the market had just opened here for the overnight session. And we knew that there was a potential resistance in around here. It did rally up to yesterday's high, stayed up there, opened here, and quickly had another leg up. But that from that point on came down here, paused a little bit prior to the release of the FOMC news. Once that was released, the market really had a pretty good sell-off. So the next level down that we were looking at was in around the 21 area in here. Obviously the market got a lot lower than that. It got down as far as 1250, but you can see it had a pretty good bounce also again late in the day. So this is a pretty key area in around 1220 basis the March contract, and so it would not be surprising if the market overnight or tomorrow comes back down and tests this 12.5 area, and maybe even have a move below it. The next area down will be 1198. On the other hand, if the market moves above the 2021 area overnight and stays above it, the market potentially could have a move higher. And really the next level up would be around the 29 area and then up to about the 34 area. So we also use the market profiles from the regular trading hours, which is what you're looking at right here in our analysis. And it also just gives us a little bit different perspective on the market that we're looking at, and try and make sense of this auction. So here you can see our software with our trades today. Our first trade was a short trade here. You can see it was an entry here. We had a short trade here after the news, another short trade here. This short trade, you can see this is our entry price, was never filled. This short trade had a nice fill here. And then later in the day, the market did come off. We had another late short fill here, had another drop lower. So all of our trades were short today. This one we took, and this one was kind of late in the day, although a lot of our traders took it because of the overwhelming bearish sentiment. This trade here we actually didn't take because this was an area of resistance going into the day, and it had already come down and hit into that resistance and bounced. We're still intraday up, and by that time we were in a neutral filter, so that's why that trade was not taken. But we're still able to take a little bit of profit out of the market today. And of course our traders who've been with us for a little longer actually had a really good day using our software to identify some really good trading opportunities. In particular, this short right here off of that diamond had a really good leg down. So at any rate, that was really it for today. This is when the news was released. That FOMC news got a little volatile in that time period, came off, had a bit of a bounce right there, but then sold off hard, bit of a stall, and then another leg down. So at any rate, that's what we're looking at in the market as far as areas of support and resistance and targets up and down. If the market continues to hold above 21, 22 area, from the 20 to 22 area, I would say that it's probably going to have that leg up to around 29, and then we'll kind of see what happens from that point. There will be some news released tomorrow, although not of major importance. The crude, of course, is one of them on the regular Wednesday release. We do have some more important news coming. Of course, on Thursday we have the jobless claims, PPI, and so on. So there's some fairly important numbers on Thursday and a CPI on Friday. So that's our look at the market for emini day trade. Any questions or comments, just get a hold of us. We can be reached at info@eminidaytrader.com, and we always enjoy hearing your questions and or comments. So that'll be it for today. Thanks for watching, and we'll see you again tomorrow.